Hey, hey, hey. Welcome in. Welcome in. Lacy and I are really grateful to be here today to address a frequently asked questions, especially for those of you who have mortgage payments.
Yeah. Okay. So I have a mortgage and I'm allowed to pay X amount extra every year to pay down the principal of my mortgage. So my question to you, Winnie, as a client, what should I do? Should I make that extra payment every 2 weeks to my mortgage? Or should I store that money inside my policy and then take a policy loan to make that extra lump sum payment? This is a question that comes up frequently, whether it be like a vehicle loan or a mortgage loan, whatever it might be. So I wanted to hash this out because yes, paying down debt is always good. But when we are coming from a mindset of IBC, guide me.
Well, let's unpack this question a little bit further because I think what first comes to mind for me is, the difference between short-term thinking and long-range thinking. So I think there's immediate gratification to want to pay down the mortgage so that you don't have as huge of a balance on your mortgage. Because we all know that, when we borrow money from somebody else, we are parting ways with interest that we will no longer, interest goes by. It absolutely has, the only exchange of it is that you were approved for a loan and they gave you that money so you can get that house. I guess that's a trade-off to it. But Nelson always talked about this. You are either paying interest to someone else or you are parting ways with interest that you could have otherwise earned. It's not to diminish your desire to want to get rid of the snakes and dragons quicker out of your life. You can get that. We can still achieve the same objective, but we don't have to give up the interest that you could have otherwise earned before you parted ways with the money. Because essentially what you're doing is you're taking the money, that extra money that's sitting in your bank account. And you're probably thinking, okay, well, I have this extra money sitting in this bank account anyway. So why don't I just pay down my mortgage quicker so that on the long haul, I'm not paying as much interest to the bank. So that reasoning is quite sound. Okay. I would also hazard to really say that what infinite banking concept does when you're really thinking about it as a mindset, it's also not just about getting back the interest that you could have otherwise earned. It's also about experiencing more financial control in your life. So when you make that extra payment to the bank, you will never get that back.
The money came in and the money went to the extra payment and it's gone.
Yeah, you don't have liquid access to that money anytime soon, right? Especially if it's in a mortgage format. Unless you're in one of those mortgages where make a payment and then you get extra secured line of credit to your access, then that almost feels like I'm not really losing anything. But what you are still losing though is your opportunity to experience more compound growth, like uninterrupted compound growth of your money that you would get if you were to first run it through your policy.
And I think this way of thinking is so foreign to people because it goes against everything that we've been taught about money. We have been taught to earn money. It comes into our account. We use it to service our debts or our life expenses, whatever it might be. And then we continue working to earn more money. And then we're going to throw in this plot twist of, hey, before you send your money and make that extra mortgage payment, let's put it over here first in a policy, and then we're going to use it. It's a complete plot twist that goes against everything we've ever been taught. And I think that is the hurdle that is the most challenging for a lot of people because it is requiring us to rethink our thinking.
Well, and let's be honest too, it means it's also an extra step. It's not as convenient as just making an extra payment and then be done with it, okay? I think in another podcast, we talked about how control and convenience are not synonymous with each other. Yes, it's an added step in your cash flow management and it will feel like extra work at first, especially if you've never really done it before. But once you get into the habit of thinking, okay, I'm going to do my best instead of paying everyone else out first, I'm going to make sure it runs through a system that works for me before it works for someone else. That's probably one of the first things to really sort of remember, and that it's not convenient, but I will experience more control because of it. And how a person feels like they're getting more control is like, well, number one, not only does a person have that money go through as a deposit option first through their policies so that it effectively, that deposit option buys more death benefit.
Right.
And if we remember the number, like one of the rules of the contract is that the cash value and the death benefit must equal the same by age 100. If we're forcing our death benefit to grow, we're forcing our cash to grow.
And the cash is liquid to us.
Right. And does it mean like it's 100% liquid? Well, I guess it just depends on where you are in your stage of owning a policy. But either way, though, if you could do two things with the same dollar and be more effective with your money, why wouldn't you just take a quick moment to do that? Because when you do it over and over and over again, it feels like nothing after a while. It's only inconvenient at first.
It's just like anything else. Once you get into the habit of whatever ritual it is, maybe it's exercising. I don't know. What do they say? It takes 21 days to form a habit or something like that. So once you do the hard work at first to form that habit, then it gets easier and easier. So a conversation that I'm going to have this week with a client is, I'm just going to play the role of the client. I have stored money away as a deposit option in my policy. And then I took a policy loan and paid my taxes. And now I feel like, help me understand it, because now I'm having to repay this loan. So what benefit did I gain by storing that up? And this is, with this particular client, it's a case of they've just kind of forgotten why and what the heart of IBC is and the why of it. So I'm going to have to walk them through this conversation. But even if I'm storing up X amount of money to make that lump sum payment to my mortgage, okay, now I have to service this policy loan. So can you speak to that?
Who owns the debt? He who owns the debt is in control. You're either paying debt to someone else or you're paying debt to yourself. And who would you rather be enslaved to? Right. I guess. Would it be someone else or yourself? Now, when most people come to us, it is about control. What was the problem in the first place that you were wanting to solve when you first came to us? There's a lot of people who do understand that it's not amazing, it's not empowering necessarily to have the bank as their first choice of option when they have to borrow money. And there's enough stories out there that have shared it's not in our best interest to have our debt owned by the bank.
Because they're going to want their payment no matter what.
No matter what's going on. And life throws us curveballs, doesn't it?
Mm-hmm.
Right? And we can't control when a curveball comes our way, and we just have to deal with it, whatever that is, whether it's a repair on the vehicle or replacing an appliance or all of a sudden being out of work for a few weeks because we had an injury. Life just throws us these curveballs. And it's about little tweaks that we can make, especially using the IBC mindset to optimize our financial environment so that we can overcome our financial curveballs with a lot more ease. But it's a number of tiny things that we do that will make it so that we can literally cut through all the financial headwind that comes to us throughout our entire life.
Yeah, like Nate and Brandon at Think Tank, defense wins championships. Just like in sports, there's offense and defense. Well, there's offense and defense in our finances as well. And defense wins championships. So that really hit home for me. Coming back to who's in control. And with this particular case, I'm going to really go through but what did you gain by storing that money inside your policy? Because what was gained was impressive, actually. And so it's just coming back to that. Why did you come to IBC in the first place? What are your goals? Who's in control? And let's rethink your thinking again. And this happens. A lot of us would like to think oh no, we got it. We're not going to need reminded fully got it. But more times than not, clients have to be reminded hey, rethink your thinking, right? because this is like goes against everything that you've been taught. And if you're 50 years old, you're undoing 50 years of financial habits to start the IBC lifestyle.
Yeah. And yet again, it was something that we quite often refer back to. It's easy to develop that amnesia about what you're doing this for when you have a lot of other opinions, other financial philosophies flying around. And when you feel like you're the lone wolf, this is precisely why making it a family affair is probably going to be one of the best things that you can do, where you can start sharing little bit by little bit with the positive things that can be done. And not the whole concept, but just this whole thing with like the mortgage payment. If someone is asking, what are you doing? It's like, oh, I'm going to make sure that before I go and make a second payment to my mortgage, I'm going to run it through my policy first. Because if I do that, then I'm taking the same dollar and making sure, like, it doesn't even have to be about IBC. It could just be all about, well, then that means, especially for your beneficiaries, well, that just means when I do that, you're going to have more death benefit, tax-free death benefit for you when I pass away, because I'm forcing the death benefit to grow, and I got to pay my mortgage anyway. But if I can also increase my death benefit for you when I'm gone, why not do that?
Yeah, absolutely. I mean, you were talking to two ladies who are very biased of infinite banking. So we're
Yes,
always going to advocate for infinite banking and practicing IBC. I always think too, like, let's one up them. Let's one up the banks. Like, I'm going to pay you back because you were gracious and you lent me this money for my mortgage, but I'm going to put it to work for me before I pay you back.
Just imagine a world where, let's say if you have a line of credit with the bank that they approved you for, but just imagine a world where it's like you use that for emergencies instead. Like, it's a secondary plan, not the first plan for your operating expenses.
Yeah.
And imagine where you own all of the debt on your operating expenses or all of the debt for your living expenses.
Yeah, how empowering.
So empowering. But to get to that, it's like step by step.
Yeah, for sure. So we would love to hear from you. What do you want to hear on the podcast? You can email wecare@rancherway.com and send us your podcast ideas. What do you want us to speak on? As always, head over and give us a 5-star review on Apple, Spotify, iHeartRadio, and you can also watch us on YouTube. Head over to our website, rancherway.com. That's where your journey starts, where you're gonna grab the book bundle. Thanks, guys.
So glad you leaned in with us on the Winnie podcast. We truly hope you're feeling more informed and empowered to take another step towards optimizing your financial life. Right now, make sure you hit subscribe so you can keep growing and learning with us. Until next time, we wish you prosperity in every area of your life.